Everybody, this is Jim at SP500chart.com. It's Sunday afternoon, December 11th, 2016, and we're going to take a look at the S&P 500 chart, which has continued to show really surprising strength after that middle of the night total breakdown of the futures markets when people were surprised about Trump's a victory in the presidential election. By the way, I wasn't surprised. Maybe I'll mention a couple of reasons why not as we get into this video. Not making a political case, but just to let you know why this did not surprise me. So before we get started, let me remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. First thing I want to do, even though we're not there yet, but I'm going to toot my horn because a lot of you who are watching this video are not or never have been or are past subscribers to SP500chart.com, which does a daily video of the S&P 500. And I want to remind you that in July of 2016, when the S&P broke above this level right here at about 2110, and when it got over that level by a technically significant margin, and particularly when we set a new high that was higher than those set in May of 2015, we had been watching this pattern that had resistance right at about 2110. Once we got significantly over that, you'll remember that's when we made it official that we had a target in the S&P 500 of way up here, very close, or let's just for the sake of, if you'll give me a nickel here or there, either way, 2470. And I think that seemed like maybe a pipe dream at some point in time, but that's what the chart said. And you know, when the chart says it, until it breaks and until it hurts you, I think you have to continue to go with what the chart is telling you is the underlying market psychology and what the implication of that psychology is. And in this case, back in July, we made the call 2470 as a target in the S&P 500. Now, to be totally frank, in early November, I sort of went on alert to watch maybe this isn't going to work out, because we did get under that neckline briefly in early November. But now here we are at this point at 22, call it 2260, looking almost half the way there. Not quite. We're probably about 3/7 of the way to that 2470 target. And just tooting my horn, that call was made back in July of 2016. And if you want to know the truth, and I know I wasn't doing my videos back then, but back in July of 2009, when the S&P broke just over 900, I was on stock discussion groups, and I said we're going to 1340. That's a minimum. It's going to 1340, and it did. Of course, it's been a bull market, so that makes it kind of easy because everything says up and it keeps going up. At some point, something's going to say down, and it's going to go down. So far, the large, big scale has been running amazingly intact between this support line and this resistance line. And I'll be the first to remind you that this support line did not touch anything back in the early part of 2009. That was a panic situation that was setting in, and as a result, the markets just got completely unglued before, and it was at that point when we found bottom. This is a very clear trend line up here, and when you make a parallel line to that and you snap it down to the lows of 2011, you find out it lines up almost exactly with the lows of 2016. If you look at this inverted head and shoulders pattern right here, you see it looks a lot like this inverted head and shoulders pattern right here. This one was a bottom. This was a reversal. Since then, we've had an inverted head and shoulders pattern continuation, another inverted head and shoulders continuation, and there have been smaller ones along the way, but this is, to my eye, just another continuation pattern. And it looks like this market is just is moving on up pretty aggressively. If we look on a 30-minute chart, oh, by the way, if you're saying to yourself, well, gee, I wish I'd known about that call back in 2000, back in July of this year. Well, you could have. You know, you can subscribe. It's cheap. It's really cheap. It's like less than a cheap cup of coffee per day. So if you're not, think about it. By the way, I don't tell people what to do with their money. All this is looking at the chart and guessing the direction of the market based upon the information in the chart. If you will, this is an experiment in psychology more than it is a way to make money. The last thing I have any right to do is to tell somebody what to do with their hard-earned money. I don't do that. I never will. I'm not a financial counselor. I have no degree in this. I have no certification. All I am is someone, just like I say, that I've studied stock charts for many years, and I have fun doing this. I hope you have fun following it. So let's look at a 15-minute chart. We mentioned the fact that we had been in a very, very thin rising channel, and that channel started to break down, did so in fact at the end of November, but then we recovered and started to move up aggressively. By the way, we had a little almost a head and shoulders small top here. Didn't quite meet its target, but it was a very minor pattern, and it looks like we found support instead at about 2188, and that is the point at which we started to move up. The week was totally up. Every day we were up. We even now look like we might be trying to get back into this this channel here, but I want to show you something that is a new chart feature as of the week that ended on December 9th, and that is some parallel green lines here and here. If we back off just a little bit more, do we see it on an hourly chart? No, we might even have to go to a daily chart. Yep. I want you to look at this line and this line. I mentioned when we were in this extremely aggressive move upwards just after the election, which I'll mention a few things about in just a second. I mentioned that after we've made these very, very sharp ascending channels, the first thing is that they could not last for very long, and they didn't. The second thing, they're very likely not going to be the main channel. They're just something that's taken. They are channels, but they take us from a level of support up to a level of resistance. That's what happened here. Look at that. I mean, almost a straight line move in about a week and a half from 1993 to the 2160s. Okay? Big, huge move here. But that is not the main channel. It is in a channel, but it is almost, let's put it this way, the odds are very high when you see a channel that's rising at an incredibly steep rate, that by the time you get more information from the chart in the days, weeks, or even months ahead, you start to see that it's part of something larger. So this past week, I threw out the idea that perhaps we are in a rising channel defined by this line as resistance and this line as support. And if that is the case, then right now we're kind of close to getting up to that resistance line. Now, if we continue this path, we'll hit that. We could hit that line this week. And at that point in time, I would expect things to turn back down, or at least go sideways, or sideways with a downward bias, something like we saw from July through early November. That would not, matter of fact, that would be a good thing. You see this infusion of cash into the markets, then there's a slow release of that pressure as the buying pressure is let out over time, as opposed suddenly creating a panic. It's better to see it do this than it is to see it do this or this. So what this inverted head and shoulders pattern has done, by the way, is it has taken panic selling and slowly converted it into exuberant buying. That is the definition of an inverted head and shoulders pattern. It is taking people who are emotionally exiting the market and slowly replacing them with people who are very coldly and calculatingly taking advantage of that emotional exit as they gear up now for a new leg up. So it's just interesting to see that. By the way, if you want to read something about head and shoulders patterns, I highly recommend Edwards and McGee's Technical Analysis of Stock Trends. This was a book that was written in the middle of the 20th century, but it is full of very, very solid and good information. So anyway, I guess the moral of the story is it looks like we are now in a rising channel, which just so happens to be rising at the exact same rate of ascent as the larger blue channel that we took a look at earlier in this video. The blue channel, it's not going to be exact, is rising at about 13%. This is rising at about 13%. I could probably tweak these lines a little bit and say, well, maybe this actually needs to be here. Now it goes to a slightly different amount, but the deal is roughly a 13% annual return on the angle of attack from these lines right here. So this week, like I said, it was all up. We indeed did see this turn out to behave like a bull flag, which we were looking at going into this week. And we have already exceeded, I take that back. This was a little bull flag we saw on Monday. This was a larger bull flag that we talked about as well. And guys, look how close we are to that resistance line. If we get back up there, it will be very interesting to see what happens. If the market is healthy, and if the market is going up in a controlled and sustained way, I would rather see resistance here than blowing through this line. If we were to blow through that line, and just let's say we make this huge upward swing up to our target of 2470, and it's all above this line, at that point, frankly, I would be more concerned for the bullish run coming to an end than I would be if we came up to this green line and then ended up pulling back down to the mid 2200s, 2230, something like that, even as low as 2220. The concern, excuse me, The concern would be that we're just possibly getting into a blow-off top. You don't want to see that happen. Okay, I told you I was going to mention a couple things about the election. I'll say this. One of the things that I think a lot of people didn't realize is the historical difficulty in a Democrat president being elected after a two-term Democrat administration. As a matter of fact, since I think it's in the 1850s or 1860s, that's the last time that happened. Now, Franklin Delano Roosevelt, FDR, who actually was elected four times, only served a very small portion of his fourth term. He was elected to a third term, but he was the same guy. You have to go back, I think, to the 1850s before you find a Democrat presidential candidate being elected and a different person being elected after a two-term Democrat presidency. There's just something about it. It just doesn't like to happen. And lo and behold, that was an historical event that played out again in 2016. The other thing was the markets. The markets had been somewhat lackluster throughout the summer, and that also is an indicator that showed that about 5 times out of 6, when the markets are not up much or are down in the summer into the fall, then there is a change in the presidency. I can't tell you it's as far as the party goes. I can't tell you if it's the cart or the horse that is about. It could, you know what I'm saying? I don't know whether it's the down market that causes that to happen, or if it's simply the fact that there is a mood in the country that we're about to change, and that causes the market to go down, because people know who they're going to vote for. Most people make up their minds pretty early, and I just think everything sort of pointed to what I would say would be an upset if you were listening to ABC, CBS, NBC, CNN, and MSNBC. It was an upset. But really, the handwriting was on the wall in many ways. So, guys, don't want to politicize things. I'm just saying it really did not come as a surprise to me. And also, I'd done some traveling up in Pennsylvania about a month before the election, and what I saw just being observant as I was driving around through neighborhoods and through back roads, in really what is not an urban area, I just saw a lot of support for Donald Trump. So it looked to me like he had a pretty good shot up in that part of the country, and indeed he did. So, let's look at this thing next week. Stay with me for the week. If you're not a subscriber, go to sp500chart.com, see what it takes to become one, and let's just keep following this. So far, so good. Remember, that call for 2470 was made back when we were at about 2150. We're up about 5% from the time that call was made, and we've got more to go before that does make. So let's just keep our fingers crossed that we remain healthy, that we let steam off from time to time, that we don't get rushed ahead, that we don't see too much exuberance, but a controlled ascent, I think, would be the preferred way to get there. So, hey guys, there's your video for the week ending December 9th, 2016. Thanks for taking time out of your day to watch it, and thanks for your support. Take care.